Welcome to another panel. 1 second, I'm just going to add our speakers now, Richard and Fred. It's working now. Yeah, here you go. Okay, hello guys. Hola Fred, hola Richard. How are you today?
Hey, hola. Very well, thank you.
Thanks.
How are you?
Good, very good, thank you. Really excited about this panel. I think actually this is one of the most interesting topics that we touch on. To be honest, there's a lot going on in terms of the vacation rental, the co-living space, and all the way of residence, let's say, space in the real estate market, and for sure, like after this crisis. Let me introduce you, like, you know, in VITUR, we try to cover high-level topics with C-level speakers. Today we have Fred. Fred is the CEO of Lavanda. They are award-winning business-to-business software. They basically a platform that provide a solution for property management solution for short-term rentals in the real estate industry. They're very particularly specialized on multifamily and student asset owners, and they are operating in the UK and across Europe. So thank you for being with us today, Fred.
Thank you.
We also have Richard. Richard is the head of Coliving in Jones LaSalle in capital market business. He's directing actually business development and operations functions, and he's working with investors, developers, and entrepreneurs to fund, and you basically deliver and operate assets with these new emerging accommodation models. So thank you as well, Richard, for being with us today.
Thanks for having me.
Thank you. I just see that with this pandemic, we were talking earlier before we started here, talking about how this pandemic crisis is changing the way we live, the way we work. How do you think that this is already affecting us, and how do you think it will affect the profile of investments in terms of the residential options that we're going to see soon in the market? I don't mind which one of you is going to reply. I'd rather have this like a very open conversation, so there's no particular order. Feel free to answer as you wish.
Sure. I mean, I'm interested in Fred's opinion. I guess, you know, from our perspective at JLL, that there's no doubt that COVID-19 is changing the landscape in terms of, you know, how people live and work, interact with the environment and the people within those environments. So what's quite interesting, I think, is that despite the uncertainty, probably alternative residential assets have emerged as one of the most defensive for investors, especially when we consider it versus retail or commercial assets. So despite perhaps the perceived inherent risks in a residential investment option, there's certainly a set of characteristics that make the profile of the product probably more attractive to institutional capital right now. I think that goes to show that the longer term trend, the underlying macroeconomic fundamentals for the sector is still very strong. So there's no doubt that there are changes ahead, and we're already starting to see them. But most of the operators and landlords that have published or released data show actually that occupancy levels are still relatively stable and high. And interest in leasing is pretty stable. Now, it'd be interesting to review that a couple of months from now and have the benefit of a bit more hindsight.
Yeah, from our perspective, we see quite a lot going on in the different asset classes. I think long term, I totally agree with Richard. Like the fundamentals, I think, are very much unchanged. There's a lot of strong fundamentals underneath multifamily, under student, under co-living. we can talk a bit about the trend changes, but I think fundamentally they're still very appealing asset classes, whereas retail and commercial have a very different set of problems. But in the short to medium term, a lot's going on. I mean, in student, you've seen a huge impact. So summer language schools, the whole sort of summer business has evaporated for most of the operators across Europe, which has been a big challenge. And the whole concept of what's going to happen in the next academic year, where classes might be going online, students are thinking about whether that's what they want to be doing, whether they want to defer a year. And some of those assets are quite high, have quite a bit of debt on them and things like this. So it's quite a careful balance there. I think this is probably an 18-month story, and then things will normalize, but there's definitely a bit of impact there. And multifamily, as Richard says, the occupancy rates are very strong in the current market. But our worry is that there is a bit of a sleeping bomb there, because as you see in the US, and you've seen it to some degree in parts of Europe, a lot of people are currently having stimulus checks, furlough, depends on where you are in the country. So there's a lot of support for individuals, and also you physically can't move, right? Which is a strange dynamic. So now that things are opening up, and we'll see it later on in the year, I think in early next year, if we go into recession and if the stimulus checks or furlough, depending on where you are in the world, starts to fall away, that's probably where kind of Warren Buffett's phrase, like when the water comes in, you'll see who's not wearing any swimming trunks, will come out to play. And it'll be really interesting to see what are the assets that are actually defensible. And I suspect you'll find really strong assets in tier 1 locations will be totally fine. But it's those ones on the edge which will be really interesting to see whether people will leave or go, and that's where I think asset owners need to start being much more creative. I think the day of just assuming that people are going to rock up and take your lease and pay your 5% more than last year and rent is gone. I think you need to be much smarter about, there's actually a lot of people converting assets between multifamily to co-living or incorporating service apartment, all sorts of different things. People need to, I think, work a little bit harder, I'm afraid, over the next couple of years to fill these boxes and make the most out of the asset.
So you're thinking, the guys, that it's actually a bit too early to come to a conclusion? We still need to see what are the actual effects of the crisis, right? But then at the same time, it's another question that I've been trying to understand as well. If you guys obviously are dealing with long-term investment, how do we balance that long-term expectation of our investment? Which, I mean, Richard, you and me were talking the other day, like, this is something completely new. I mean, this type of, there's not really that much data to understand how these assets are performing. So how do we look at long term when we are just like in the middle of a crisis? We don't know the effects yet. Plus, we've got a demand that is requiring more than ever that flexibility on the living lifestyle, and the nomad kind of community is actually getting bigger. So how do you think that we can reconcile that investment long term and that short term kind of vision from the demand?
I guess trying to unpick a bit of that, probably there was a realignment happening before COVID-19. I think, you know, Fred's articulated really well that it's no longer good enough just to open your doors and expect tenants to come flooding in. That there's going to be a flight to quality. That's a given. And I think there's a realignment of the relationship between operator and occupier, or landlord and tenant. And I think that, you know, the co-living operators were one of the early movers in that space to understand that the relationship they had with their occupiers was more about just renting an apartment to them. I think that trajectory will continue, and we'll start to see a lot more flexibility in terms of the offer that an occupier is prepared to give the tenant, the kind of support network that they need to give that tenant, both within the building and within the contractual element of that relationship as well, probably in the short term, given that people will have uncertainty in their work, in their life. And I think longer term, people will expect more from the businesses that they interact with. Consumers are becoming more powerful than ever before. Social media and all of the other online tools have given them the ability to have choice in the kind of places they want to live and the kind of businesses that they want to spend their money with. And I think that trend is going to amplify and will probably amplify more quickly. And so I think we'll start to see adaptation of spaces that will provide more mixed use facility within them. And again, that's something that was probably already happening. But the classic example is probably the component of co-working space that exists within what's predominantly a residential asset, and the idea that we're probably moving to more mixed use buildings in urban centres that provide, you know, live, work and lifestyle space. So I think all of these things are coming at a quite an interesting time, and you know, they would have come anyway, but perhaps something like COVID-19 has brought it all forward a bit quicker than people might have expected. And you know, the Buffett analogy is really interesting, and I think really well founded, because it's not the right of an investor or a landlord to control the marketplace. I think the tenant is in an incredibly powerful position, and I think that will only go towards improving quality, because when the control sits with the landlord, perhaps the move or the evolution of quality is a bit slower.
Thank you. Fred?
Yeah, I mean, I think some good points, and I think the short term, in the short term, I think there's going to be a lot of opportunity for people who either can excel in operations or, candidly, who have a lot of capital available. And sometimes capital is a coincidence, as in, you know, timing and what you've exited, what you've done. Sometimes it's deliberate. But I think, I'm sure Richard will probably be very, very busy. Lots of people interested in buying schemes where, unfortunately, the people who had weaker business models or you know, took more risk at the wrong time are failing. And I think that's a very natural part of economic cycles. But what it does allow is for people this acceleration of trend. And I think it's very obvious in the kind of retail world. Online shopping has now accelerated. In the workplace, we may end up talking about this, but remote working has accelerated, all those kind of things. But in our world, this trend towards high, like, hospitality baked into the standard, as opposed to being some sort of exceptional thing that you buy. Technology enabled service. Richard was talking a bit about tenants there. I completely agree. I've always said, like, I think it's insane, particularly in certain markets like the UK, that tenants are actually treated so badly, like in terms of their ability to choose what's going on, the ability to, you know, the lease structure, the legal structure. There's some hope that this mixed use scheme will start to get more traction, but there's a lot to do there. There's planning, there's government, there's a lot of things that need to kind of get out of the way for that to happen. But our vision has always been of buildings where, you know, you have a flexible percentage of space that moves back and forth depending on what's relevant in that market. So whether that's X% service departments, Y% long-term residential, co-working, co-living, and you can kind of, within reason, move that around as the market changes or as you know, recessions come and go. And I think that kind of value is now being sought by investors, and where they don't have it, they're using this opportunity to try and push for that kind of flexibility in their assets. So we see a lot of student operators who are now pushing for the ability to bring in co-living or multifamily into their assets. And we see a lot of other partners looking for co-working and other elements. And that background shift, hopefully, because governments kind of need to support the industry now, will accelerate some things that probably would have taken 10 years, which hopefully now might take 2 years.
Very interesting. I was going to ask you about the investor, but now you're raising this. How flexible, how ready are we in terms of legislation for that to happen? Because I think that's somehow the bottleneck. I don't know if, like, that's you probably have a European vision as well. Maybe that could be obviously the trigger. If we make administrations understand that investor and the demand is requiring that type of flexibility.
Yeah, I mean, it's Richard will know more about this, but I think it's very tricky right now. I think I think there is a moment in time right now where investors can push for change, and I think governments are listening and planning authorities are listening, but I think it's probably too early to tell whether there's going to be big change. A lot of that also depends on, sadly, kind of political cycles, right? There are certain countries in Europe where governments are not in a position to be able to make strong moves. In the UK, there has been talk recently that they are going to rip up the planning legislation and this kind of stuff because they have a strong majority and things like this. So I think we'll have to see how that plays out. Right now, I don't think that modern concepts like co-living and our version of kind of a vision of flexible housing is well adopted at all, to be honest. You still have so many barriers to getting things live. And it is a real barrier to innovation because it means that only the biggest companies with the biggest wallets can kind of move things, and it takes years. And actually, we think it should be much more streamlined. But I think that individual grassroots pressure is happening. When every council or mayor or authority is getting overwhelmed with applications to change, they will eventually have to listen to that. And we are seeing that to a large degree as people can no longer just sit with a student asset or a long-term rental asset. They have to kind of break out of that concept.
Okay. Richard, would you like to comment on that?
Yeah, just to kind of, I think, broadly agree. And yeah, we track over 35,000 beds in the co-living space across Europe. So it is happening, but yeah, I don't think it's happening in alignment or with the support necessarily of the key policymakers. Yeah, I think policy is there to protect the occupier, and I think what we need to be careful of is that absolutely we want innovation, and there's no doubt, I think, by consumers or policymakers that we need alternative housing solutions. I think the risk, though, is inherent in an industry where profit trumps all. The quality metrics are often they often fall short or undelivered, and there's a big example of that in the UK with the permitted development rights, which was the conversion of commercial buildings into residential spaces. And one of the issues that occurred there was substandard accommodation. And unfortunately, that accommodation was also micro or small. And there's probably an adverse effect of that on co-living specifically, that one might look at what happened in the permitted development space and translate that into what could happen in the co-living space. And so I think it's fundamentally vital that we legislate to protect occupiers first and foremost, but that we allow innovation to come forward. And again, in the UK, we have minimum space standards that are larger than most of the cities or countries in Europe. 37 square meters is the minimum residential space standard here. So, if you're trying to deliver something underneath, below that, policy is not set up or designed to deliver that. But with, ever increasing and densifying urban centres, there's no doubt that we need an evolution in the housing model. And I think people have known and recognised that for a long time. But as Fred said, it will take time. And I guess the other thing is that, and maybe slightly controversially, but I'm not sure that the prototype exists. I'm not sure that the asset is out there that people can point to and say, this should be the model for co-living of the future. But coming back to the beginning point, when you look at the hotel hospitality sector, which is really having a difficult time right now, you can envisage extensions in the length of stay within a hotel, and adaptations of the use in order to ensure these buildings don't become defunct, which will be critically important to policymakers, and to ensure that employment either is maintained or grows. What we can't have is lots of high unemployment and loads of vacant buildings. And you might also start to see that in some commercial space as well, where it starts to become redundant with the way in which work life has changed. But yeah, I think it probably needs, a bit of time to work its way through. Legislation is notoriously slow. There is emerging policy in London for co-living. And I'm not sure necessarily it's the right policy, but at least there's policy there. And Fred's point is very important in that if you only have a few voices, you never get a clear representation of what could happen, what could be delivered, where innovation truly exists. It's just those with the deepest pockets. And I think probably we don't have enough voices championing the evolution of the housing sector, flexible housing models, co-housing, co-living, and often they come from more creative industries, think tanks, workshops, architectural backgrounds. Space 10, which is a think tank out of Denmark, were one of the first to kind of champion the co-living space. Incubated by IKEA, they are ethical, sustainable foundation. We need voices like that in the marketplace as well, but it needs to be grounded, obviously, in the fundamentals of real estate dynamics and what's in the art of the possible. But I think those kind of groups need to come together, and probably the vested interests in co-living right now, are driven fundamentally by profit, and it's the balance of profit and purpose ultimately that will enable the best form of housing to come forward.
Very interesting point. You mentioned, well, do we have? I mean, you mentioned those 30,000 beds that you monitoring across Europe. Is there? You see that it's difficult to understand out there from the market. Do we have already a proof of concept, like someone that's found the key for this co-living new model, or you guys find that there's still a lot of try and error, and this is still not a proof of concept that could make us understand that this is a scalable and sustainable model for the current situation?
Look, from my perspective, choose my words carefully. I think that
they're all your customers.
Yeah, we work with most of the players active in the sector, the protagonists, and I'm always inspired by someone that goes out to build a business, to create a housing solution, and to bring communities together. There's no doubt that everyone that's involved in whatever shape or form is doing something admirable. That said, if you look at co-living specifically globally, there is no one form. In the US, it's predominantly a condo style model. So it's a multi-family asset that has a component of the asset, which is co-living. In the UK, we have this studio forward model. And in Europe, I think a lot of it is repositioning of existing buildings. It's not that any of them aren't correct. It's whether any of them are as good as they could be. And I think that part of the reason that they're not as good as they could be fundamentally is legislation that we've just talked about. It's about investors being willing to take a risk on something nascent and unproven. And it's about going back to the original conversation we were having, an operator that is credible enough to be backed to scale. And so there are lots of barriers to entry. And so you see a lot of different models coming forward, predominantly in smaller scale assets. And fundamentally, I think from that perspective, it's not of an attractiveness to bring in institutional capital in order to make that sector, or make the sector scale significantly. It does require ground up purpose or purposefully built development.
Yes, it's still very early days, right? I mean, at the end of the day, you've got a small handful of partners who've done this at scale. You've got a lot of, I can probably be more impolite, but you've got a lot of people who are grabbing like a 30, 50 unit building, doing very minimal change, and then suddenly calling it co-living. And I don't think that's what anyone in the co-living kind of sector has as their vision. But with so few big assets, like plus 300, plus 500, there's not, I don't think you can do something amazing with 30 units. Like, there are so many cool boutique operators, but that doesn't prove that can scale 10x. So you've got this difficult thing where you've got loads of literally hundreds of amazing, cool co-living things, but they're quite small. So therefore, you're not sure if they can scale. If you're a big fund, you're not going to throw billions at that. And then you've only got a very, very small handful of operators who've done it at scale. And while they've done some cool stuff, there's not a huge track record. And the really big stuff, I think you need to do from cradle to the end. So you need to think about it in the planning. You need to build it. It needs to be part of the vision from day one. So you need some really brave people. And there is stuff going on. There's some really big projects coming, but it's all quite early days. So I definitely don't think that I totally agree. It could go much further in terms of vision. And I think it's quite undecided what that looks like. But that's the opportunity as well, right? That's what's quite exciting about this bit.
Yeah. I think, adding to that, I think that the best place to take advantage of that broad landscape of those that are vertically integrated, i.e. they will find the land, they will take the planning journey, they will deliver the asset, and they will operate it as well. I think that if you're in the kind of rent for rent model, especially in secondhand stock, you will attract investment, and you'll be able to build a portfolio of small assets across multiple locations. But I think very few of those will ever be truly attractive to long-term institutional capital. And on top of that, I'm not convinced that they move the needle in terms of increasing housing need, housing supply to satisfy housing need. And I don't think they add that additionality to the suite of housing options that we require in large urban centres, because we have a big market here of houses of multiple occupancy. These are traditional houses that are leased up room by room, and the vast majority of the rental stock is in that form. Now, it's very admirable to operate these kind of spaces and to give a better service to the tenant, a better quality of furnished product. And I think the whole buy-to-let sector needs to be elevated. It needs to step up, because quality controls, rogue landlords have been around for many, many years, and it's unacceptable. But I don't think that makes co-living necessarily. Not that co-living is anything specific, because I don't think anyone can really define what it is. But I don't think that necessarily makes co-living. And I think that over time, shrewd landlords of small housing stock and shrewd managing agents of small housing stock will up their game anyway. And then all of that is one and the same. I think what we're talking about here is a developer-led product, something that, whether it's the repositioning of a large-scale asset or a ground-up development, I think that's the sector that we at JLL are focused on. and are trying to bring forward.
Right. That's very interesting. About rebuild or or build to rent concepts. But I'd like to ask you something first before we go into that. You guys are talking obviously to investors, and they come to you with the worries or the interest on these new concepts. We got Michael here in the Q&A. He's asking, like, what is the minimum capital to enter a market for an investor? And then what are the main worries that you guys get? Like you, Fred, for example, you are providing the software solution to run smooth operations. What are obviously you as a software as well need to adapt to make sure that the operator is got the tools to provide those services or those amenities that are also supporting that community around that co-living space, for instance. So what is that? Let's answer these two questions. What is the minimum capital that to enter the markets, and then what are the main concern requirements that the investors has, and what is the typical investor as well? Those three questions.
Yeah, I mean, from the sort of platform side, I'll let Richard answer on the first part, because he'll know more about that than I have a background in the city, but I have my own personal views. But in terms of we actually get asked in terms of our software and our platform, ignoring our sort of actual platform. I wouldn't sort of necessarily plug that, but one of the things that a lot of people come with is when they want to go down in the size and therefore, get in cheaper effectively into a smaller asset. There's a big challenge in how do you deliver a great service without having a really high leakage, without having a really high cost base. So then you need to bring in technology to make that very efficient. There's a natural efficiency, obviously, in running 1,000-unit scheme versus a 100-unit scheme or a 50-unit scheme. So the only way that you can go down that size and still keep any kind of vision of hospitality, co-living, etc., to some degree is to do with technology. And so therefore, what we get asked a lot is how do you automate things in your platform? How do you make the tenant experience really fantastic without necessarily having loads of bodies there? How do you incorporate third-party services which might bring kind of sexy, cool things into that asset, which might be everything from hairdressers and dog walking and all the rest of that kind of stuff, or short lets underneath your leases, all this kind of stuff, but facilitated through your platform. And how do you make that really easy for the operator? Because as well, if you go smaller in the asset, this is not a completely fair rule, but you tend to have a difference between the owner and the operator. Integrated operators tend to like bigger assets because almost by definition that Greystar or whatever trying to build around like a really big asset portfolio or collective and co-living. So you've got this kind of spectrum of different people, and managing the smaller assets is much harder without a cohesive technology solution. I mean, I would argue that there is no fantastic technology solution, and even what we're building is only 10% of the way where it needs to be, and that's exciting as well because there's loads of opportunity there. But I think when you're trying to get in sort of into smaller assets, that it's how do you deliver that service around it? Otherwise, it's effectively just multifamily with small rooms, which you can do, but it doesn't make any difference. And there, you may as well just do one apartment and call it that. So that's sort of from the platform
side.
I think that there's all different types of capital that is and has always been invested in residential. So it's kind of it's a deep question that takes us down a rabbit hole. I think that there will always be capital out there for smaller platforms, and that might be more family office focused. And I think we also need to understand the pools of capital. Within a co-living platform, you have a propco, the asset, and you have an opco, the operator. And so are we talking about capital that is investing in the operational company or capital that is investing in the asset? I think, when the sector first started emerging, there was kind of typical VC capital that looked at opcos and maybe almost saw them as a quasi prop tech investment opportunity with significant scale potential. You know, our business would always say that the majority of them are property managers. And actually a property management business is quite slim in terms of its margin. And the need to go and invest in and build out lots of technology is, I think, unwarranted. And if you're an operator, do what you do best. And if you're a technology business, you know, such as Fred, you know, adopt the technology that exists out there. I think there's very few operator platforms in the market that are forget all of the Sonders and you know, the kind of Airbnb platforms out. We're not kind of talking about that marketplace, but you know, if fundamentally you are a property management business and you're building out your own tech, in the end, there will be smaller than a handful of them that will ever have tech, A, that's best in class, and B, that will be scaled and used by other businesses. It's just fundamentally the case. And I've seen it time and time and time again with large vanilla property management operators building their own suite of technology that's just no good. You can aggregate. I think you can be an aggregator. And so I think a lot of what the Lavanda platform does is critical to your operation, but you might aggregate beyond that. And so as a business, you need to be able to understand that. So I think that OpCo capital needs to understand what they're investing in and what their return profile looks like. And I'll come back to that in a second. But the other piece is the PropCo side, and talking specifically about my world, which is, as I said before, that kind of larger scale ground up. Predominantly the market today is private equity. There are fewer of the, let's say, long-term institutional capital players in the market today. They will come, but with every nascent sector, it's probably predominantly kicked off by private equity. And when you speak with the private equity, you know, most of them want to deploy a significant pool of capital. You know, it might be equity checks of 20 million plus. They're probably looking for a programmatic journey, a programmatic partnership. And at the kind of higher end of the private equity chain, they'll be looking to deploy 100+ million over a series of assets in different marketplaces. There are those that will look at single asset opportunities. And as I said before, you know, there is capital at the smaller scale, but typically in the market that I'm dealing with, it is private equity led. They're looking for programmatic journeys, a programmatic partner, and preferably a vertically integrated partner. Now, coming back to kind of complete this or round the circle, is that at a point in time, if you are successful, today we're living in an era of branded living, okay? And I truly fundamentally believe that. So what that means to me is that the occupier has a relationship with the operator, and the bond is very strong, much in the same way it is in other sectors, whether that's an Uber, an Apple, or whatever business it might be. And that's something that the co-living operators have been really strong at developing. And so one can envisage that at a point in time in the future, actually part of the value of the asset is intrinsic to the quality of the operation. And therefore the operation has a value linked to the performance of the asset. And so on the one hand, that means that private equity probably wants to have a stake in the OpCo. But on the other hand, the value of the portfolio of assets is only as strong as the value of the brand that sits underneath or in front of the operator. So they become intrinsically linked, and the value of the whole is enhanced, in my view. So it's an interesting way of how will, once you've built a portfolio 5, 7, 10 years from now and you're looking for your exit, how do you value? Obviously we understand how to value the asset, but what multiple do you apply to the operational side? Because an investor won't want to buy the assets without bringing the operational brand along with it.
Very, very interesting. Very good point. But then again, you are connecting the investment directly to the operator, which is somehow a bit more risky. That dependency, let's say, for that.
Yeah. Yes, which is why, you know, the way I see it is that the market will be threefold. You will have student operators that move into co-living that have track record. And the question for them will be, have they got the right infrastructure and the right magic dust to deliver and operate a co-living product, which, despite what some people tell me, I genuinely believe is very different to operating student. Not all student assets, by the way, but in the main. Then I think you'll have the vanilla large property managers out there who manage, you know, thousands of residential assets that will move into co-living as well, because fundamentally they have track record, they have infrastructure, and they will be supported by the large institutional capital players. And then the third will be, you know, a few of these breakout disruptor co-living operators that come forward and continue to grow and scale and have great success. And, you know, Common is a big example of that, having, you know, I read yesterday they'd signed a large management agreement with Nuveen, one of the world's largest investment managers. You know, they are becoming, or they are institutionally acceptable as an operator, and they were a startup platform in the co-living space. So there's a real success story there, and we need to look at, you know, other operators that might be able to step into that space as well. And there will be a few, but in the main, I think that they will find it difficult to scale. And I don't think the sector can be built off leases. It must be management agreements, which is probably another story. But if you look at Common's model, actually, they won't take a lease. They will only do a management agreement.
Yeah, I agree a lot on that last point. So that's a whole sort of like webinar on its own. But I've spoken publicly for years about this to bore everyone, but I strongly think that this kind of like lease model doesn't work. It can work, but it has such problems in the agency principle dynamic and the tag along kind of sell rights and who owns what, and this particularly that brand point. I mean, it doesn't help you to have a bunch of assets if something like Sonder's ridden it for 10 years because the brand is owned by Sonder and they walk away with all of that, and then what do you sell at the end of it? I mean, it's such a complicated scenario. But for us, those management contracts, while we don't take them, but we help effectively facilitate them through the platform. We see that as the best conjoined manner. Whether it's not co-propco, that basically is the same thing. In a sense, it doesn't matter, but it's the structure that aligns interests the best.
I guess the final thing that I want to add is that, you know, part of the challenge here is that some of the co-living operators have been, you know, amazing at providing their occupants with cappuccino and yoga, which is great. But the fundamentals of managing a building are keeping the lights on and the heating going. And I think we shouldn't forget that you know, the institutions are right in that they want to see infrastructure, because, you know, if you're going to back a startup, you need to know that they do have the skill sets, the capabilities, the experience to manage large scale assets. And it's a bit chicken and egg, because, you know, some of them need to be given the chance to prove themselves. And what I think is quite interesting is that years ago, when we used to build residential assets, on the ground floor, you would always put in a large supermarket. In the UK, it would be a Tesco or a Sainsbury's, because they had the strongest covenant strength. They created the most value in that part of the building. But today, you know, an investor will take a niche coffee shop or a startup business that doesn't have great covenant strength, but adds value to the residential component that sits above that part of the building. And so they do understand that A, they need to work more with startups, with independent businesses, and B, they need to take a bit more risk, because in return, it will create added value to the asset. And I think the investor is wise that you might be a large scale property manager, but I don't think that means that you can deliver high quality, community focused, customer centric service to the occupants of the building. And often the independents, the startups, the disruptors are much better placed at doing that. And so it would be nice to see some kind of collaboration, perhaps. You know, one could envisage a large operator providing all of the facilities management piece of the operation, and one of the brand-led startups providing the front of house experiential service.
Yeah, I mean, what I see from the operations, and it's something we saw in the short-term rental, in the vacation rental market, is you see a lot of operators, they started on this Airbnb kind of model, but you realize it was a claim like it was easy money. And then they realized that it's not so easy and there's not that much money, because they're very thin markets. So we got like thousands of operators that they're actually struggling to make a profit. And again, as you are developing a whole new industry, let's say, and a whole new concept, it seems that, again, it's very risky still, and very difficult to find that steady or that reliable operator or company out there that is going with investment and added value throughout the life of the assets. I think there's quite a challenge there. And then at the same time, if you look for an investment point of view, you guys were mentioning before, is there an opportunity really for repurpose assets, or do we need to focus on build to rent or purpose-based assets? I mean, for you, Fred, I don't know if you, from the tech point of view, actually, it makes a difference for you, like what is the actual profile of the assets, or technology actually allows that flexibility that you can actually integrate to whatever the project is.
Yeah, I mean, I think it's a bit of a strange one for us, because if we work with some assets that are like, I think our biggest asset is a scheme which has about 1,000 units, and it's relatively new, so it's really it has similar floor plates and things like this. It does have differentiation around it, but ultimately it's designed for scale, and that does make things easier. I mean, just simple things like procedures are not necessarily configured by unit, they're configured by unit blocks and all that kind of stuff. But having said that, those assets have their own issues, which is scale. And actually, you know, gone are the days if you are paying a decent rent that you are happy to wait days for a fix to your door handle or whatever, right? Like, you need to be doing this like a short-term rental company. You need to be responding within seconds, minutes, chatbots. You need to be responding physically within hours. You need to be notifying them, keeping them up to date. It's a service, not something you ignore. So on that sense, although there's sort of the purpose-built stuff is kind of in theory easier to manage with software, in another sense you're delivering to such a level of expectation that has its own challenges. The purpose-built stuff, I think is undoubtedly more tricky, because you have all sorts of different like rooms and shapes and corners, and the pictures don't match this and that. But that is where like platforms like us deliberately invest in, to make that fungible and make that able to be scaled, even though that is not quite the same thing. So in that sense, there's an opportunity for us to actually add value to an asset. And as you know, in the short-term rental market or the medium-term rental market, and increasingly, I think in co-living and other areas, people are not willing to just accept like a generic one-bed description. They want to know what's the view. They want to know like what floor is it on. They want to know like what's the rest of the building like. And actually, things like there's a cool coffee shop and a cycle repair shop downstairs matters. So just as much as like where the local Tesco's or Mercado's, whatever. But so. And I think incorporating all of that information, pushing it in a good way to all the distribution channels, that's where we come into play. But ultimately, you need a great operator, like that, without a doubt. And I think the more challenging the building, the more you need that level of experience, particularly when it comes to the boring stuff that nobody in PropTech likes talking about, but the lifts, you know, the doors, the like sink fund, the roof, all that kind of stuff, which ultimately, I mean, I've walked around buildings where the lift's been out of function for a week, and you're just like, how is that even possible? And it still happens in normal big developments in normal big cities. So if you can't get that stuff right, you know, the rest is not going to save you.
Okay. Thank you. Very good point. Richard? You're on mute, Richard.
Sorry. Yeah, I would echo everything that Fred has said. You know, there are some interesting assets coming forward. There's some interesting design taking place that I think will change the ease of operation of these buildings, the requirements of technology. And I think the point that I wanted to get in, because I know we don't have you know, too much time left, is actually about how operations will need to change in light of certainly the current environment, but also the unknowns ahead. And technology can play a strong role in that. And you know, whether that's touchless, keyless technology, or the ability to, you know, sanitize spaces. You know, I think all of these things need to be thought through from day one now. You almost need to be able to design in, and the trick, the risk with that is clearly that technology becomes redundant quite quickly. So how do you design in? But I think, you know, for operators for a long time, they've looked to technology to drive efficiency and to improve performance of the asset as well from a financial basis. And I think moving forward, that's going to become even more important to the operational structure of the building, but to the design as well. And so these are points that I have no answers to. Suffice to say that you know, if you're dealing with an investor today, one of their first questions will be, you know, how are you reacting? How will you react to the next issue that arises? And you know, we need to look to our technology partners, Lavanda and the likes, to you know, understand how you know, we create the right structures to have the right level of infrastructure in order to maintain the level of service that customers are expecting today, which is very, very high, and the demands are very, very strong. So there's lots of challenges ahead, but you know, from my perspective, the challenges are a good thing. I saw a question in here about the government in Madrid being an issue, and you know, we don't have the same instability in the UK for sure, but we're always challenged with dealing with policymakers, and you know, I kind of like those challenges in that, you know, if you can create the right product, I think you really do have a chance to bring something forward with the blessing of policymakers. And Carlos, you and I were speaking about this today. And I think, you know, the challenge is not always on the policymakers. The challenge is sometimes on us as an industry to actually come forward with that groundbreaking, forward-thinking, cutting edge, innovative approach to housing that makes people wake up and step up and say, this deserves an opportunity to be tested.
Very good point. Okay, I think we reach the limits of the time. Very, very interesting topic. As you just said, Richard, it's like there are a lot of challenges, huge challenges ahead. But again, as we said earlier, that's where the opportunity will be. Definitely, we see that technology will be a key part of the new development of the industry and the new type of accommodation. So there's a lot to see on the residential space, let's say. So thank you very much for being here with us today. Thank you very much. Appreciate your thoughts and sharing that with us. So thank you. Appreciate it.